Hi everyone, it's time to take a look at Apple again. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So let's take a look at where they think Apple is going to be in 3 years. They start off by mentioning tech heavyweights are up 54% in the past 3 years, and the Nasdaq is only up 22%, so it is still outperforming on the longer time frames. In the shorter time frame, I think it's a little bit different. Apple's been underperforming a little bit, but still doing pretty well. And of course, they still have the iPhone. This is a massive revenue driver. It is their largest form of revenue, and it's still doing quite well. They also have other things like the watch, the iPad, the MacBook, AirPods. All of that is still doing quite well also. And they also mention here the iPhone is a mature product. There's a ton of them out there, and it's starting to get a little bit harder to drive those outsized revenue gains from it. And they really need to introduce something new, and there's currently no reason to believe that they are going to do that. You can see the chart over the past 3 years is quite strong, but over the past several months it's been sideways choppy, so that's pretty interesting. They're still trying to create that Apple ecosystem, which is doing better. Services only represent 19% of overall sales, but it is extremely high margin at 75%, well above the 37% for their other products. But overall, they're saying it's not a great setup for investors over the longer term. Price to earnings ratio is quite high, the premium is high, and currently revenue growth is slower due to the maturity of the company, the maturity of the iPhone, and the returns over the next 3 years are probably not going to be as good as they were over the last 3 years. Moving over to Apple here on the monthly chart, you can see over the long term, it's been a very big gainer, obviously. Here in January of 2003, it was at 24 cents, and now we're at $195, almost $196. So obviously it's been a massive run, and it actually went public even lower, down around 5 cents. So it's been a huge run for sure. But like I said, over the past few months, it's really not been super great. So we got into the zone around January of 2020, and now we're just a couple of percentage points higher in that 196 area. So it went from 182 to 196 over the course of a couple of years. So it is at least somewhat of a gain. And you can see it is still positive for this month. Last month was very strong on earnings. They did much better than expected. They also announced really strong buybacks, which gave the market a lot of hope. And that month was a 12% month. So very strong there for Apple. So far, we're up 1.8%. Again, we're still below those all-time highs, which is sitting at 199.50. So right there at the wick high from December. Then we had 4 months of downward price action, pretty bearish actually. Then one really strong month, which engulfed all of those candles. Momentum right now, it is bullish. RSI, it is bullish. So I would expect this month to close a little bit bullish, potentially even touching those all-time highs with how strong this looks. Then we could see another candle similar to this one where you get a rejection from that level, and then we'll see what happens from there. But right now, monthly momentum says that this is bullish. Jumping down to that weekly chart, you can see 4 weeks in a row of bullishness. Got one sideways candle here, pretty much at the high from that earnings week. Again, we're right in the zone here. 22 January week is the high we're looking at. Touched that next level for me, 196.79. We touched that this week, and then we pulled back a little bit from that level. Again, momentum and RSI on the medium time frame is super bullish still. But jumping down to that daily chart, you can see we hit the trend line, pulled back from there, had a pretty decent down candle, 2%, touched the level 186.81, held that level, gapped higher and rallied right through the next one at 193.96, and then hit the level that I've been talking about at 196.79, right there at this high here from pretty much the end of January. If we can overthrow that level, then we're probably headed to an all-time high right in that 199.50 level. Then we'll see what happens. It is extended for sure. We're in overbought conditions on the daily chart. Momentum is bullish. However, you do have to continue to watch this price action. I do think it's in good shape. It's down a little bit pre-market here. And this could be a zone of resistance waiting for that area to break. Honestly, these levels are a little bit tight for me. It could be a zone here between that all-time high and this previous one. So continuing to watch that, and then like I said, that all-time high, it's definitely within range. And if it does what it has been doing, gets into that zone and then rejects again here, that could be a pretty significant indicator that we could be moving back down into the 180s, just like we have the last 2 times that we've been in this zone. Moving over to the tasty charts, you can see we're pretty much right in the middle of this range. It's been sideways choppy. It is bullish conditions. Support is at 144.97 on the monthly chart. Momentum continues to fade here, which is interesting. Based on that, you would expect a rejection off of these previous highs. Again, bullish candle, still looks good. Potentially up to that second ATR. That would be the highest I would expect if we did overthrow these all-time highs. That's at 207.81. So about another $12 higher if we can continue to maintain that upward momentum. This is the volume weighted MACD, and you can see here we were rallying while this was fading a little bit. So It is worth noting that sometimes the volume weighted MACD is not as reliable, but it is a good indicator to keep on your charts. You can also see there's been no volume on any of these months all the way back here to October of 2020, so really no excitement around the Apple name. And then moving over to the weekly chart, you can see we did get back into bullish conditions 2 weeks ago. Still in bullish conditions here. We're at that second ATR. That's at 196.50, and that's the exact zone that this previous rally did culminate, hit that level, and then rejected all the way down to that second lower ATR. Then we had that really strong candle on earnings. It's rallied us right back to that level. Short time frame, price target, that would be 204.25 right there. That was the level that we grinded along for this upward move. Usually once you hit that, eventually you see a breakdown, but you can see for a couple of days here we did grind along that level before pulling back into the middle of the range. Seems like that's where we could be headed now. Again, doesn't give you a ton of upside, about $9 from current price. And then looking at that daily chart, we are basically already at that upper ATR 197.47. Makes sense why we're starting to get a little bit of rejection from there. Recent rally, hit the level, pulled back. That was that big down candle, 2% down. Almost hit the middle of the range, continued higher back to that upper ATR. Now we'll see what happens from there. The trend on these ATRs is still technically bullish, so you can absolutely see a grind along that level for an extended period. It's definitely happened before. You can see a similar move here, touched it, grinded higher, pulled back slightly, grinded higher again, right to that level. So it's certainly possible. Momentum on the daily chart, it is bearish right now. And then ATR trailing stop 186.50. If that breaks, then we'd be back into bearish conditions. So overall, I'd have to say it is a little bit bullish, but there are definitely some levels that are pretty close, and the risk reward off of those levels is a little bit questionable in my opinion. Moving over to the options chain, let's see what we can get here. About 73 cents for the 195s. That's about 70 cents out of the money. Decent little opportunity there. This is only one day out, so this is a Thursday, so these are the Friday expirations. Not terrible, especially for a stock that's rallying here. If you're trying to get a little bit further out of the money, 187s, 185s, we talked about that being a pretty strong zone of support. Have to wait 2 weeks for that. Again, not a terrible return. I'd probably sell a put spread here if I were to be doing this. You don't want to put up all of that money only for about a $95 gain. So this way you only have to put up $1,700 and still get that $100 profit. It also limits your risk a little bit. So then you could sit on it a little bit longer potentially. Again, not a bad move, especially if you're trying to get into these shares at a little bit cheaper price. Like I talked about, the stock is a little bit extended and you might want to be a little bit more conservative if you're trying to get into it on the put side. Let me know down in the comment section what you think of Apple. Are you a long-term investor or are you just a trader trying to get in and out on these sideways choppy moves? And where do you think we will be in 3 years from now? Definitely like and subscribe if you got any value from this video. If you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.